10-year note yields moved higher today. Before we heard from day 2 of the Fed Chair's testimony to Congress, we got CPI, which came in stronger than expected, vaulting 10-year note yields north of 460. And then after when the Fed Chair started to talk, he echoed yesterday's comments, didn't really add a whole lot, talking about the Fed is going to be patient and waiting and watching. After CPI and after the Fed Chair, we saw those rate cut odds continue to move lower. Right now, only seeing one 25 basis point rate cut priced in to the market for currently in 2025. Maybe about 10% chance of a second 25 basis point cut. I remember when we were talking about having 3 or 4 cuts in 2025. Now we're down to 1. And ultimately, coming on the heels of that stronger inflation data, the Fed will have to wait and watch and see what happens. But ultimately, 10-year note yields have made a big move. Going back to Friday, we traded as low as 440. So we've rallied over 20 basis points in a very short amount of time, culminating in today's close north of 460, holding about 8 basis points above yesterday's close. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. And leading up to today's CPI, we've seen volatility drifting lower, seeing some bigger moves lower earlier in the week. Today it was kind of flat, roughly unchanged, which is odd given the fact that we saw yields moving higher. Typically, we see volatility and yields moving hand in hand. Today, we didn't see that. Yields were higher, volatility was unchanged. Lastly, let's talk about what we have tomorrow. Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims number. We also get part 2 of the inflation data via PPI. And then we get a 30-year auction, which will close out this week's group of auctions, which started on Tuesday with the 3-year note auction and today's 10-year note auction.